Over the years, marketers have been analyzing the different generations: baby boomers, Gen X, millennials. And recently we have seen there's a red thread among all of them: speed. They all want everything to happen now. My name is Francisco Serrano, and I am the Chief Speed Officer at One to One and the host of the Now Gen podcast. Join me. Each episode, we talk about what's happening with brands, see how brand professionals across different industries cope with this fast-changing market, and live up to the expectation of this now generation. Welcome.
This episode is brought to you by One to One, the fastest day-to-day design and content studio. For more than 17 years, One to One has been their premier partner for many Fortune 500 companies, proving that tight deadlines shouldn't be a hassle.
Welcome back to the new episode of the Now Gen podcast. This is Francisco Serrano, and I am very excited for this episode as we dive deep into a topic that we never usually discuss, which is the finances and the world of brands. And we have a very special guest. Radice is currently the CEO at Moven and is also the president and founder of Treehouse Consulting Group. I'm very happy to have him, and he will share his experience and knowledge with all the group. So thank you, Rich, for being here.
Thank you for having me. I appreciate it.
Excellent. So first of all, would you like to tell the audience a little bit more about the two companies that I just mentioned you have?
Mm-hmm. Yeah, sure. Well, Moven is an extension, I guess, of what I've done with Treehouse Consulting Group. To kind of go back to the origins of my professional career. Out of college, I started my career as in the accounting field. I was at PricewaterhouseCoopers for a number of years, focusing on financial institutions and insurance, and then decided to go the private route, and started to maneuver towards unique opportunities. One of them had been working as a CFO for an ultra high net worth family office, one of the co-founders of SAP software. So a small group of individuals would manage the wealth of that particular individual. And in doing that, I got involved in quite a few more, I would say, development stage businesses that we had private placement investments in. My role then was to oversee those businesses to a degree, and just kind of demonstrate some stewardship over the investment that we had made. So that got me involved in a variety of different verticals that were contrary to just pure financial institutions and insurance. One could say a very dry industries. There were more exciting industries that I got involved in. So when that opportunity came to a close and the family office closed, I decided that I wasn't going to be able to find an opportunity like that so easily, because I could describe that as probably the greatest job I ever had. So I had to, instead of wait to find that opportunity, I had to create it myself, right? So I started my own practice, Treehouse Consulting Group, and that was designed to provide that type of financial, fractional CFO oversight that I had been involved in for the private placements at the family office. So at the time, and I'm going back 11 years, at the time, that was a relatively new concept, not brand new, but a new concept that most of what I would consider my target client base were still getting comfortable with fractional executive work. As you may or may not know, I mean, the past 10 years have changed that. Everything has gone fractional to some degree, right? Everything is modular, whether it's workspace like WeWorks, but even professional services are now modular. So I think it was slightly ahead of my time in those terms, And the opportunities that I was able to garner over the course of those years have developed in size and scope, and that's where I came across the opportunity to work with Movin. That was just over 4 years ago. I started as the fractional CFO and grew into the full-time CFO, and recently was given the opportunity to take over the CEO role. So I'm operating as the CEO and CFO of Movin. I also advise a life sciences company that's working on a vaccine for Alzheimer's. That's a relatively new role that I filled. I work on other types of opportunities, a water reclamation company in New Mexico, and other smaller opportunities that I just provide some guidance and oversight. But those do not demand much of my time. But Movin is my primary focus. So that's kind of the evolution of my career and background. And as you can see, it's always open to new opportunities. But over the past year and a half, 2 years, I really have really zeroed in on focusing on Movin and getting it through a very critical time in its history.
Okay, and focusing now on Movin, because that's kind of, I was looking in your background, your LinkedIn profile, and it says that it's changing the way people view and manage their money. Can you explain a little bit more about Movin, please?
Yeah, sure. So Movin was started back in 2011 by a banking visionary, a futurist called Brett King, who has since written several books. He's got another one coming out soon, that were futurist in nature, but really kind of making predictions on financial institutions and the modality of banking as it will be in 5, 10, 15, 50 years from now. A lot of his predictions were very spot on in terms of what would happen to branch networks. The fact that financial institutions were always typically heavily reliant on a branch footprint. And that was the main modality in which they engage with their customers. That has drastically changed. That has drastically changed, not just because of COVID, but it has accelerated significantly as a result of COVID. Now, branches, used to be something that were mainstream, but still did not have did not properly serve certain unbanked or underbanked individuals throughout any facet of society, whether it's in the U.S. or abroad. So that is now changing. And as we move towards digital transformation in all industries, some have been disrupted earlier, some have been disrupted more, but the financial institution, banking in particular, is now undergoing this kind of regeneration of how it engages with customers, number one, and how it serves its customers. And I mean that banks traditionally are very product forward. They develop a portfolio of products that they decided they want to sell, not necessarily in response to what consumers need or want. So they develop a product profile, and they do their damnedest to deliver it to customers that they want. And what we're doing now, not just through digital engagement, but through the data that we consume as a result of that digital engagement, is understanding the behaviors and the desires of the consumers themselves, right? To better understand how to develop less of a product, but more of an experience for customers. And I think that's what they are becoming much more accustomed to receiving in all other aspects of their life, right? Particularly news, right? News has now become this immersive experience because people now become a part of the news. On Facebook, they become a part of the news. They become journalists. They become editors. They synthesize headlines and they regurgitate them to their own taste, and that's taken on a life of itself. But how do we do that in other industries where we allow the consumers to dictate the ecosystem that they live within, right? And that has that's what helps formulate the digital ecosystem, right?
Okay.
So what Movin does is basically provide that digital channel and data capabilities for financial institutions, particularly banks, to better engage with their customers and provide insights. And what we do is, attempt to cultivate better behaviors to help consumers become more financially healthy.
Okay. So, and what would be the difference between Bank of America and Movin?
So Bank of America is a bank. Movin is a software company. And so Movin provides right now a digital engagement layer. So we basically build the mobile app for a bank. A good example of that is with TD Bank. Now, TD Bank in Canada was our flagship client. We had built and delivered their what's called TD MySpend. That is a companion app. It's it's a sidecar app to their primary TD app.
Okay.
What that companion app provides is the financial wellness capabilities. It takes in the customer's data, and then it helps develop and generate financial behavioral insights. And the commercial results that we've garnered from that are, reduction in attrition from their customers, increased savings rates. So those types of metrics actually result in tangible value to the bank and obviously tangible value to the consumer, right?
Okay.
Higher balance in their savings account. And with that, the bank can sell them more products. But again, more products driven towards better financial wellness for that particular consumer.
Yeah. And I can imagine, I mean, I've never. So if you tell me how many times you've been to the branch in the last 5 years, I can tell you 1 or 2 because the bank wants me to go to sign something, but it's not of my liking, not because I want to go. So I would imagine that it's that kind of a service like, I'm going in the past of taxis, that everybody is against the taxis, but you just have to ask the taxis. But when Uber came, they changed the whole ecosystem, or Carvana is doing, and Amazon is doing to the car industry, and nobody wants to go and feel harassed by the sales. Hey, buy BMW is the best one. And have you decided yet? And all this discount. Oh, because you came today, I'm going to give you a 20%. All this information that is not needed anymore for the consumer. I would imagine that what you're telling me is some kind of that. It's going towards that direction, right? To say,
no, that's a good point. It's ironic that you bring up the car, the vehicle industry. I was actually one of my clients in the past was they would do livery leasing. They would lease vehicles to predominantly Uber drivers, right? So we understood the demand in the market and the contrast with, the TLC in New York City. I'm originally from New York, so yeah. I've had my share of yellow cab rides, and I can compare them with an Uber ride. It was night and day. And what had happened was, again, through digital transformation, they were able to build an immersive experience for the user, for the person taking the ride, as opposed to just providing the utility. The yellow cab was just the utility. It was four wheels and a driver.
Exactly.
Uber was an experience. Right?
Exactly.
And now you have, it's just as regulations are trying to protect that for a variety of reasons, and allowing, and trying to level the playing field. And I use that term deliberately. So, the TLC is trying to level the playing field for the yellow cabs in New York, right? To preserve that as a jobs program and not have people go, purely go out of business. But it's interesting because Jamie Dimon had made a similar comment about the challenger bank space in the U.S. and that large legacy banks and the regulators, they need to level the playing field, meaning don't allow the cultivation of challenger banks, purely digital banks, to develop quicker than legacy banks are ready to compete with them, right? And I thought that was ironic, and to say that leveling a playing field for JP Morgan Chase, they need to level the playing field because they haven't gotten a head start.
Exactly.
What a head start do they need? So it's a little disingenuous because when things don't work out in their favor, they'll call foul. Digital banks, just like any other digital channel, are what encourages progress, right? In favor of the consumer, and that's what and that's what we look to do, is to be ahead of the market, understand the consumer first. If you understand your consumer and you have contextual insights about who you're selling to, you'll sell more.
And also a good example is what happened to Tesla, right? Tesla, it's now biggest, it's bigger than Ford and all this, comparing them to JP Morgan and, the newer digital banks can have that growth faster, right? And that takes me to the next question. So as we were chatting before starting this podcast, I was telling you that the Now Gen audience is kind of, everybody has like this red thread that is they want everything to happen now. So how the digital banking industry and what Movin is doing is going to affect or why should this, the Now Gen podcasters should be looking at what digital banking means for them and Movin,
Yeah. Well, listen, the way we look at, generational preferences, needs and preferences, it is very in vogue to try and accommodate millennial needs and preferences, right? They do represent a large portion, and they are the market that is coming into existence, the largest group of consumers. But there is still the earlier generations that have a millennial inside of them, right? There, you will see, consumers digitally transform themselves out of necessity in some cases, right? The pandemic is bringing out the millennial in several people, my father included. My father now has a Facebook account, right? Never in a million years would I think he would ever do that. But the same thing is as they transition to smartphones. So I think there's a lot to be said about how the millennial generation is shaping the next generation of products, services, and even preferences. And we're accumulating those data points, right? Because what we haven't necessarily had in the prior generations is all of that accumulated data that we can aggregate, cut up, and provide our own insights to ourselves. Say, what do these people really want, right?
Yeah, and when you were talking about this digital transformation, personally, I don't understand why there's no ACH, so a transfer option from companies. When you're doing big business to business, big companies, they send you checks still, like in the 1930s or 40s when everything started, and they don't do just the transaction, which is easier, faster, and it's like like sending your printed catalog to your home that it's going to end up in the trash again. I don't understand that. So
yeah, that is all starting to evolve. That is all starting to evolve. With I think the template for that is like a PayPal's Venmo, right? So it's a P2P. It's a payment platform that allows people to make payments in real time. That's all now being reconfigured for, B2B and all of the type of methods of payment. So that is all going through this entire paradigm shift. So, the traditional ACH that takes days to process, they don't process wires after hours or on the weekends. That is now going to just fall away. But again, it is all a function of the regulatory environment, which is one of the biggest elements to all of this progress, right? And one thing I can call out for U.S. versus Europe is, the promotion of challenger banks in Europe was enabled through fintech charters being made available. Right. So 2015, 2016, as early as then, they had fintech charters available. They don't make those readily available in the US. They don't make them available at all. The OCC had a couple of years ago, the OCC had revisited issuing fintech charters. New York State Department of Financial Services squashed it immediately, right? Because again, big banks are asking for a level playing field. But again, it's holding back progress. If you could think of the TLC in New York City saying, well, Uber can't operate. Well, they tried to do that. And a lot of municipalities and big cities always attempted to, to get rid of Uber, right? As it was too competitive to, their own taxi and limousine services. But so all of these things are going through a paradigm shift. They're all enabled through the regulatory framework. And that's a challenge.
I'm sorry. And as I heard you said in the past, COVID has been an accelerator for you, right? So can you tell us a little bit more about how the pandemic has influenced your line of business?
Oh, yeah, for sure. So for Movin in particular, we had been held to an exclusivity. We weren't able to operate in the US, right, due to one of our commercial contracts. At the beginning of COVID, we were able to renegotiate that, and now we're allowed to operate and sell into the US, which was a game changer for us. But again, that happened at the heel of the pandemic, right? And we weren't necessarily able to do all that outreach and business development because all of the banks that we were selling to were now completely disoriented and worried about what they're going to do, right?
Yeah.
But now, as the effects of the pandemic thaw to a degree, obviously we're gonna have to deal with this new normal, I think for years to come. But as things start to thaw and the banks get their legs beneath them, they realize now that the table stakes for them to succeed are to digitally transform in a meaningful way, right? So what that's done is prime the market for us, and at the very least help these financial institutions that we sell to solve the problem on their end, whether to buy or build. It's going to be too costly for them to build it themselves. They don't have the expertise. They're not software companies. They're banks. So they would have to accumulate the talent, and that talent does not want to work for a bank. They want to work for a technology company. So they don't have the talent. We do. So we have the technology that's already built. We can deliver it to them for much cheaper than it would cost them to build it, and they solve the speed to market. It's readily available, and it can be integrated within a matter of months. So that helps us. And now they understand the necessity for them to have this type of digital capability. Yeah. So it's really helped us. And, we don't just sell in the US, we sell all over the world. And because it's a pandemic, it's impacted every corner of the earth.
Yeah.
They're all going through this kind of condensed decision-making cycle, which for us, it shortens the sales cycle. And it helps us kind of penetrate the market that much faster.
Yeah. I would imagine that it's kind of this feeling of you're pushing an idea, and they're saying no, and suddenly, light at the end of the tunnel, the pandemic hits, and everybody is a genius now. Boom! Oh, hey, Rich.
That's precisely right. And the funny thing is, that a lot of this, a lot of the thinking with from the large institutions was, if we ignore it, it'll go away, right? If we ignore challenger banks, they will go away and they'll be suffocated. That is not the case, right? That's maybe a couple of less than sophisticated thinkers thought that about the internet, and they were wrong. Digital transformation is going to take hold in every industry around the world, because if an industry does not digitally transform, it will be left behind.
Exactly. And
And every organization will have some form of banking capability. Everything.
yeah, I mean, the other day we deal with brands all the time, and with, Fortune 5, Fortune 200, Fortune 50. And, and when I was thinking of this podcast, I was kind of saying, do marketers need to rethink of how they are approaching in the way they are doing the transaction? I mean, probably yes. And you know why? Because the other day I was talking to the one of the directors at Amazon, and they told me that they already have a in the payment form department, the Bitcoin specialist, kind of. So they're already, I don't know if it's going to be a reality or not, but
Sure.
they are investing in that position, and trying to innovate in that side. So I guess the question of, does, Fortune 500 brands need to think of how the banks are going to transform the digital realm, and how they are, the e-com just grew like 200% in some brands, and others it's just whatever, they're through the roofs in sales. So the digital banking has to have that kind of a
Absolutely. It's happening every day, and the course and speed of merger activity, partnership activity in the space is growing exponentially on its own. So it's been interesting to watch which types of large organizations have, basically put their heads together to deliver a more immersive experience. Goldman Sachs just hired an exec from AWS, right?
wow.
So think about that as bringing two worlds together, right? And
That would be wow.
yeah, no, and that's the type of thing you're starting to see. And we have a partnership with NYDIG, which is the New York Digital Investment Group, and basically they bring Bitcoin capabilities, right? And to be able to store value of Bitcoin and to transact. We formed that partnership because we knew the demand that the large top tier banks are now changing their opinions, or maybe they're not changing their opinions, but they are now accommodating the preferences of their consumers who want access to Bitcoin, to be able to store it, to be able to trade it. So that is something that, because of the consumer data that large institutions are now collecting, they understand what those preferences are. They're making the appropriate adjustments.
Yeah, and you need to be able, as a company and as a brand, you need to be able to understand and detect when there's an industry transformation. I mean, think about Blockbuster, right? They said no, rent, and boom, there you go, right?
Yeah,
so
absolutely.
And Netflix came and just do the whole thing. So this big banks, they're trying to, of course, I think, as you were telling me, to put a barrier and say, no, hold on, because of security, because of, but then again, you see Venmo moving like a fish in the water, and my kids are and
The
they're
biggest challenge now, and again, the term challenger bank, there are challenger banks in the US. The largest is Chime. You have Varo, Current. So these are pure challenger banks, which basically they have no branch footprint, right? They're purely digital. They can operate throughout the US. They're enabled through a bank charter, but it's a sponsorship model. So they don't have their own traditional bank charter, except for Varo. Varo was actually one of the first, the only, that has, has applied for and received a traditional bank charter, and they operate.
okay.
But to go back to your question in terms of how should marketing and financial institutions, banking in particular, work together, right? to serve the consumer. I think there's a lot to be said about where this generation, where society in general, and I think we can say that it's not just the U.S., it's not just North America. Society in general is moving towards more benevolent purposes behind organizations, right? That's what's birthed, concepts around frameworks like ESG, right? Environmental, social, governance of organizations. It's an entirely new corporate structure that's designed to redefine stakeholders of any particular organization to say, hey, you have more of a purpose beyond profit. And we want you to have more of a purpose just, beyond me as your single customer. We want you to have, do social good. We want you to be, part of the, part of the global citizens, right? So I think that is now what is informing a lot of the messaging, particularly in the U.S., is that it's got to have more of a benevolent purpose. It's got to be socially driven, and that's becoming table stakes now. In many cases, that could be a thorny prospect for some companies because they take political sides, right? But they have to make their own decisions in that regard. But I think at the end of the day, you have to kind of adopt this do no harm type of persona. Each organization would have to do that to kind of demonstrate that it's not just about profit, and they're giving back to a community in some sense, right?
Okay. And talking about, what you were saying about, or we were discussing about pushing, and then what is the right thing to do and how do you do it? Looking back at your career, in moving and, this private investment firm, family business, what is the one thing you remember the most with that you said, hey, Rich, you really kill it here, right? So the proudest moment you remember?
I really, the time I had that realization wasn't, I don't necessarily know if it was a particular milestone. It was more just kind of an accumulation or a look back, right? It was a look back to say, well, damn, I didn't think it would come this far. And I guess I appreciated the person I was years ago that persisted through what seemed like a pretty dark corridor, with very few opportunities to say, hey, listen, this is how great things are built. It's not going to be easy. If it was easy, everybody would do it. I know it's, as the old saying goes, but I gave it the time, I gave it the effort. And basically it's like, I felt like I had to be a fisherman with a big net. If I just persisted, and wasn't kind of, disheartened by any, lack of progress in any direction, then at least I would continue to fish with a big net. When you fish with a big net, you have more of an opportunity to catch something that you're looking for, right? Okay. And that's what happened. And I continued to fish with a big net, and those opportunities have kind of, again, developed in scope and size, and it's really satisfying. And then when you become, in my mind, I like what I do because I feel like I'm good at it, right? When it's a chore, when it feels like a task, a job, a role is an accumulation of tasks and jobs and things like that. But when you start to enjoy it, you get good at it, it becomes less about those tasks. It becomes more about the purpose. And if you see the results of what you've been doing and the hard work, and it pays off not just for you, but for other people that rely on you, that's the reward right there. So that, I guess that to answer your question, it was not one particular milestone. I guess it was just one day where maybe it was even a bad day that I was having, where I looked back and say, damn, it was a lot worse back then. And because you kind of, you stuck your head down and drove through it, you're in a much better position today, and you're doing what you want to do.
Yeah, that's loving what you do. Well, congrats on that, because not many people, do, that's what everybody's saying in the social networks. Do what you love, do what you love. But
Oh yeah, I think that's a very, very dangerous piece of advice.
yes,
Follow
so
your dreams. Not out of college, you don't follow your
no,
dreams. You
no,
get paid and you learn how to support yourself. And
and
then
then
in your off hours, you follow your dreams. You want to be a painter, a dancer, go for it. But pay your bills first.
exactly, that is for sure one. And I was going to ask you, so it's a good cue for that. What is the one piece of a takeaway that you can leave our audience? The one thing, because we talked about, pushing, we talked about, doing the right thing, we talked about all your career. So among all that concepts, what do you put in the table that somebody can take away and say, boom?
Uh, as far as career, um, I think one thing I would say is I feel that there's it's very popular now for kids to come out of school, college, and want to start their own business. I always think that that's a great expression of an entrepreneurial spirit, which you never want to kill. But if you give it too much sunshine too early, it may kill it on its own. People want to start their own business, and whether it's a service, if it's a service, they want to charge people as experts and consultants, and you're not an expert when you're just out of school, so you won't be able to sustain yourself. You have to live through the paces. You have to, you continue to learn after school through various jobs and roles and experiences. Give that some time. But don't abandon your entrepreneurial spirit, but learn from people who have been through it before. Develop a template for what's next for you. I don't think it's an irresponsible thing to do. You can still hold on to your passions, but at the same time, develop yourself professionally in a responsible way.
Great. Yeah, I completely agree, because nowadays, like we were talking, it's fashionable to be an entrepreneur and have the pictures and the Lambos and all that, and
Yeah,
it's just
very few people do that. It's like I dream to be a professional hockey player. I live in Florida now. There's not a lot of rinks around here, so see how that worked out.
exactly. I was going to tell you that I wanted to be a professional hairdresser, and
there you go.
There you go. So there's no hair to
that you
dress.
practice on yourself.
There you go. Okay, Rich, we're wrapping up, and before we end this interview, wonderful interview, is I wanted to ask, because this show is about brand talks, right? So, and since you mentioned you're from Florida, which are your 3 preferable brands for sunblock?
Sunblock
Or sunscreen? I mean, I would imagine that you being a bank, type of guy, security and software type of, you would definitely have sunscreen in your.
I do. I try and avoid the sun as much, ironically. But I do have sunscreen, Hawaiian Tropic, and the other one. I only have 2. I have two brands, and I can't think of the second one. But it's got that sport. It's the sport version. It's allegedly doesn't come off when you sweat or when you go in the water, but my dermatologist told me otherwise. But
Hawaiian Tropic, it works. It works also for me, because I tend to sweat and touch my a lot, and then it goes into my eyes, and then they're red, and it's a mess. So I completely.
Copper tone. That's it. Copper tone and
Copper tone.
Yeah, those are the 2 top.
Okay, great, excellent. So, well, we're wrapping it up. Anything you want to add or you want to say to the audience now?
No, I appreciate you having me. It's always good to talk about what you're passionate about, and I really appreciate you having me on, and I'm looking forward to hearing some of the other podcasts. Sounds pretty exciting.
No, thank you again for coming here, and I just wanted to let everybody know that we were talking with Rich Radice, CEO at Moven and founder of Treehouse Consulting. If somebody from the audience wants to reach out to you, Rich, can you tell us where they can do so?
Sure. I have an email address. It's rather long. It's rich.radice@treehouseconsultinggroup.com.
Okay.
So
Okay. Rich.
mouthful, but I answer my emails.
Okay. Perfect. And LinkedIn, are you a LinkedIn user?
I'm on LinkedIn. Yes. Rich Radice, Radice.
Okay. Yeah. Okay, Rich. Then LinkedIn, you can search Rich Radice and you will find him there and he will answer right back. So thank you very much for being here. If you want to learn more about the most relevant power brands for the Now Gen, stay tuned for the next episode.